Pablo, good to see you. How you doing? How you been? JP, good evening, brother. Good to see you as well. How you doing? How you been? Brother Miles and CMF, Comatose, good to see you as well. How you doing? How you been? Hi, Miles. How you feeling? Not better. Sore throat is still there. Headache a little bit. Slight blocked nose. Not feeling great, but we're going to power through this live. Evening, Pure, good to see you as well. How you doing? How you been? Good evening, Miles and family. Susie, good to see you as well. How you doing? How you been? Hi, Miles and CMF. Ripple, good to see you as well. How you doing? Good evening, Miles. Hope you're feeling better today, buddy. Let's go. Adi, good to see you as well. How you doing? Okay, let's do intro, disclaimer, what we're going to talk about on tonight's live, and then we'll go back to the comment section and straight into the first news. So, welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, pretty much vital information for you to know about regarding the world completely transforming into a digital space. This is episode 367 of the CMF Live. If you're watching this for the first time ever, the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes only. And we also do Q&As on this live as well, which means if you ever have any questions, put it down in the comment section. More than happy to help you out. Now, as always, we have a mixture of news to go through on tonight's live. We have news regarding the US stock market, which has impacted the crypto market space. We have essentially some Trump news to go through on tonight's live, some announcement news to go through on tonight's live, some Ripple news to go through on tonight's live, some international news to go through on tonight's live, and some European news to go through on tonight's live. The first one we are going to be covering is regarding the US stock market, which has impacted the crypto markets once again. But before we go through that, let's go start the comment section first. And I just want to say thank you so much to everybody from the CMF who has already liked and retweeted this live. If you're watching this on X, I appreciate it so much for everyone that's liking and retweeting all these lives. If you're watching this on YouTube, thank you so much as well for liking the live. And also thank you so much to everybody who's put a comment outside the live, because it really does help with the algorithm as well. Now, before we go for the first news, let's go inside the comment section first. This is what's happening there. Then we go straight to the first news. Let's see where we're at. We were here. Good evening, Miles. Hope you're feeling better today, buddy. Let's go, Adi. Oh, that sucks. Yeah, it's not the best, but we can do this. Good evening, Miles. The CMF, how are you? I'm good. Callie, how you doing? How's things? Happy Pisces. Good to see you as well. How you doing? How you been? Okay, let's do the first news on tonight's live. So, the US stock market has declined, which is essentially weighed into the crypto market spaces once again. Even though, we have people like Michael Saylor inside the crypto community, we have some other high-profile CEOs who, swear by the sword that Bitcoin is the alternative asset to stop the inflation, to stop the bleeding. Everybody jump into Bitcoin if you want to essentially hedge against the stock market, against geopolitical events, because Bitcoin is a risk-off asset. It's essentially a digital gold in another sense. It sometimes doesn't play out like that, I'll be honest, when it comes to Bitcoin. So today, the US stock indexes declined, and it impacts the crypto market space. Stock indexes, US stock indexes, experienced declines today. The Dow fell 0.06%, the S&P 500 erased opening gains, and the Nasdaq slipped 0.1%, which essentially affected the crypto market spaces, also slipping down. Market reactions see fluctuating crypto equities. Coinbase marginally increased, while essentially BTC options expirations may stir volatility, showcasing interconnectedness of equity and crypto markets. Recent market activities include significant options expiring, essentially set for September 5th, worth over $4.5 billion. That could stir the market space as well. This impending event could heighten crypto asset volatility as investors brace for substantial, essentially, fluctuations in Bitcoin and Ethereum prices. Recent, essentially, reactions from the industry leaders have been minimal, with no direct statements from prominent executives such as Franklin Templeton's CEO, Brian Armstrong, or Circle's Jeremy. Nevertheless, there's a noted withdrawal trend across centralized exchanges, with almost 898.13 Bitcoin exiting the platforms, indicating essentially a cautious investor sentiment. Ethereum has also experienced an average return of minus 5.75% in September. Bitcoin's average return in September since 2013 has been minus 3.55%, shared essentially by the market analyst at Blockbeats. Analysts also suggest that the present essentially of traditional and crypto markets trends could essentially heighten the volatility. They highlight September's historical impacts on cryptocurrencies and note potential regulatory repercussions, although no official essentially commentary has emerged from the US authorities or crypto-related companies. So far, CEOs essentially have not mentioned anything. For example, Michael Saylor, who typically comes out and goes, everybody buy Bitcoin, Bitcoin is the best, Bitcoin will save your life. He hasn't made any tweets like that so far while the market is essentially down. But as always, as I've said before, we need to get regulations inside the market space so we can decouple from Bitcoin's footsteps and lead into utility. The faster we get regulations, the faster every crypto asset doesn't have to follow Bitcoin's footsteps. The market can be manipulated with one asset only. It's like having one TV remote, and when you press up or down, the market follows it. And the up and down only works on Bitcoin. If we get regulations, we get utility. It's difficult for the market to be controlled with one TV remote, if you know what I mean. Now, the SEC is what we're going to talk about next, is essentially the SEC's agenda proposing crypto safe harbors and broker deal and reforms. So the US Securities and Exchange Commission, SEC, Chairman Paul Atkins has released a regulatory agenda containing proposed rules that could significantly affect how the agency essentially handles digital assets. Let me just be honest, the SEC and CFTC have come a long way from being anti-crypto to being pro-crypto and pro-innovation inside the United States. You've got to give it to Paul Atkins and you've got to give it to the CFTC because they are doing amazing work on building the foundation for the crypto space inside the biggest market space on the planet, the US. So the SEC released about 20 proposed rules as a part of its spring 2025 agenda. Though each proposal varies in terms of potential impacts on the crypto industry, many suggested that the commission would continue to soften its enforcement approach, establishing a safe harbor essentially reconstructing existing regulations to benefit projects. The agenda covers potential rule proposals related to the offer and sale of crypto assets, to help clarify the regulatory framework for crypto assets and provide greater certainty towards the market space, said Atkins, adding that the agenda reflects our withdrawal of a host of items from last administration that did not align with the goal that regulation should be smart, effective, and appropriately tailored within the confines of the statutory essential authority, which is facts. Gary Gensler, when he used to run the SEC, he said the regulations we have in the traditional sense will work and apply to cryptocurrencies. He didn't want to change because he was essentially being used by the bankers so that the bankers can still control the market space. Obviously, the more we move into a crypto world, the less power the banks will have, the less power the brokers will have as well. Among these proposed rules, the modifications could allow crypto companies to operate with less regulatory oversight and reduce the risk of legal action. Other proposals suggest modifying broker-dealer financial responsibility rules, which could lessen essentially the burden on crypto companies reporting data, which is great. Broker-dealers rules have been a point of contention for many essentially inside the crypto industry by placing know your customer and anti-money laundering law, essential regulations on networks, often without the means to gather such data. Notably, however, where the proposed rule changes suggesting modernizing the SEC framework to accommodate cryptocurrencies. The Commission proposed the Investment Advisors Act of 1940, which lays out regulations on custody be improved to address cryptocurrencies. Yes, this is what we like to see. The SEC and CFTC changing laws so they can apply to cryptocurrencies as well. Less than 8 months after a proposed rule change essentially suggested bringing digital assets under stricter guidelines, we've essentially quashed. Now, though proposed as a part of Atkins and the SEC agenda, the rules must go through an extensive process before adoption happens, including a public comment period and a review, which is not bad because the SEC is actually going around in every American state pretty much to do some sort of a roundtable with large, medium, and small crypto startup companies, or essentially large crypto corporations, and so on. Since the resignation of the former SEC chairman Gary Gensler on January 20th, many of the Commission's decisions represented a complete about face-dropping years-long investigations and lawsuits, and issuing statements suggesting it would change its approach to enforcement. And I could tell, essentially, without a doubt, the SEC has definitely did a complete 180 on everything Gary Gensler said and did, and they've essentially removed everything pretty much he did and essentially undid everything, which is why it took such a long time for the SEC to be able to build that foundation, because of the mess that was left behind by Gary Gensler. As SEC Chairman Atkins has some authority to interpret Commission rules and guidelines over crypto. Now the SEC is working in favor of the crypto companies. Before, the SEC was working in favor of the banks and the brokers. The tables have switched, and the brokers are not happy. Neither are some bankers, but they have no choice but to adapt. The world is going digital, whether people like it or not, whether bankers like it or not, whether brokers like it or not, whether government members like it or not, or anyone, if they like it or not, it doesn't matter. The world is going digital, full stop. And we can see that happening when the SEC and CFTC are taking action like that. Now, one billionaire has decided to come out and give his, essentially perspective on the market space and where the retail section should be heading towards. Before we talk about his perspective, let's go inside the comment section first, and then we go straight into that news. So let's see where we were at inside the comment section, and then we go straight into that news. So let's see where we were at. And as I said before, this is live, which means if you do have any questions or statements, put it down in the comment section. More than happy to help you out. Indeed, we can do this. Let's go, Pisces. If you can retweet, comment, share out the live to build the CMF family, bigger facts. Let's go, JP. For everyone inside the CMF, or if you're not a CMF member who has liked and retweeted this live, thank you so much. If you haven't liked and retweeted this live, please like CMF members and retweet this live. If you're watching us on X, if you're watching on YouTube, just like the live. Good evening, Miles and CMF, free and forever. Good to see you as well. How you doing? Tell me once when Bitcoin actually played out the way it's meant to play out. Long facts. I mean, we've heard it for the longest time. Bitcoin is a safe haven. It's a risk-off asset. We've heard this from Michael Saylor. We've essentially heard this from Bitcoin Maxis. But when we need Bitcoin, and I genuinely mean it, when we need Bitcoin to actually react like it's a safe haven or a risk-off asset, unfortunately, it doesn't in any sort of a way. When wars happen, Bitcoin is supposed to essentially react like gold. Gold goes up, Bitcoin goes down. Geopolitical tensions happen, gold goes up, Bitcoin goes down. Any sort of macroeconomic events happen essentially that negatively impact the stock markets. Bitcoin is supposed to be the alternative market space, the hedge against that scenario is supposed to go up, it doesn't. So yeah, JP is, it's facts. When Bitcoin is supposed to play the role it's been given or assigned to by major CEOs, it never plays out the way it's supposed to. And I think people should call it out on that. Paul, good to see you. How you doing? Good evening, brother Miles and CMF family. Funky brother, good to see you. How you doing? Guys, what have I missed? Funky brother, perfect time. We've only went through the first news on tonight's live, actually 2 pieces of news on tonight's live, but I'll do a recap at the end of the live. Hey, Miles, let's go 2025. Let's go, Paul. Miles, how are you feeling tonight? Not the best, but we're going to power through. I love doing the live shows. I love coming on live and, seeing the CMF. So even if I am quite badly ill with a sore throat and a headache and everything else, we're still going to do the live somehow. Hi, Miles. When bull run starts and a 7,000 XRP a good amount to be safe from the Antichrist and the new global digital control. 7,000 XRP is a great amount to have regarding essentially the market space, consider variable change. But yeah, you're good. Not financial advice in any sort of a way. Even Miles at CMF, are you looking forward to the weekend? Yes, because that's when I will be resting, is what I will be doing, taking medication and resting. Hello, Miles and CMF. Tony, good to see you. How you doing? How you been? Even Miles and CMF. Jason, good to see you. How you doing? Too many anti-XRP talking. This is how you know the good one hold family. Facts. What Doe has just said, too many XRP haters out there. Even Litecoin is piping up even more. I mean, they started with that one tweet of, essentially criticizing XRP. Now, whoever's controlling Litecoin's account is even criticizing XRP even more, which I don't understand why. I mean, where is it, essentially Litecoin on the rankings, and where is XRP sitting on the rankings, and the licensings that essentially Ripple has achieved to push XRP even further? I mean, there's just no comparison between the two, but, whatever makes Litecoin relevant, if it just wants to jump on a bandwagon, go for it. When can I, and I saw one idiot, I'm not going to mention his name, but I saw one idiot post something about Litecoin today and said, I called all of my friends today, and none of them knew what XRP is, but they all brought it because XRP is cheap. And I told them that they shouldn't be buying XRP because it's cheap, because it's not cheap. And he said Litecoin is better. So according to him, that's how he does a study report. He calls people around him to see what XRP is, and then essentially bases his verdict on the people around him. Well, if the people around you are morons, that does make your study invalid. When can I see high prices of the token? I need to move out of my mom's house. Johnny, give it some time. Morning, Miles and CMF. Shelly, good to see you. How you doing? How you been? How's things, Shelly? Good evening, Miles and CMF. Good to see you. Carlos, good to see you. So how you doing? What up, Miles and CMF? Ray, good to see you. So how you doing? 4 to 5 years, bro, on very soon. Why need to wait that long? Johnny, who said? Hello, Woodhouse, good to see you. So how you doing? What's good, Miles and family? Long time no see. How's everybody, love? Steven, good to see you as well. How you doing, brother? How you been? There's only going to be one cryptocurrency that's actually going to play that role, and it's going to be XRP when things get going, even though the purpose is utility. I agree 100%. Bro, there is too much manipulation. Otherwise, exchanges would go bust. House always wins. It will be up and down. Facts. The house has to win. If the exchanges don't win along the way, then they're not going to be able to pay you out on all those leverage traders, on all those leverage trades that you do, the 50x, the 100x, the 150x. Imagine the amount of people that are doing so much leverage trading. We're talking about billions of dollars. If the market was only supposed to go up, which it's supposed to, because we're going into regulations and essentially the amount of banks inside the market space, there's so much positivity inside the crypto space, but the market has to, there has to be something that pushes it down and pushes it up, pushes it down, pushes it up. Sometimes something that pushes it down, and then up. And in between, the house has to win. There's an easy way to essentially describe the market space. The house has to win. In between the houses, the exchanges, just the bankers, and in between. If they don't win, they're not going to let the market breathe and essentially climb higher. The house has to win. It's the oldest rule in the book. They win, we win. I've also had some health issues, and I've also been busy with other family businesses. Big break of crypto. Stephen, I hope you're doing better, brother. Sorry to hear that. Litecoin must have some money to be paying. Litecoin must have some money to be paying all these people. Facts. It's about exposure for them, as everyone forgot about them. Also facts. So you think no bull run this year? Good evening, Miles and CMF. Mike, good to see you, brother. How you doing? I'm doing okay. Let's go, Woodhouse. Back on track to listen to your golden advice. Good to be back, bro. Let's go, Steven. Good to see you. Are you feeling better today, Miles? I'm still on the meds, which means short temper, which also means that, I still have the headache and the sore throat and everything else that comes with it. Now, billionaire. This is where my short temper is going to be playing out with this one. So, billionaire, essentially, Draper, calls Bitcoin ownership essential. Billionaire Tim declares ownership of Bitcoin is imperative, citing economic instability and institutional interest, reinforcing his long-held faith in the cryptocurrency's potential since August 2023. Tim's advocacy underscores Bitcoin's perceived necessities amidst the global upheavals, essentially possibly fueling market enthusiasm and reinforcing essentially investor confidence. Billionaire venture capitalist Tim has proclaimed that it's becoming essentially irresponsible. It's becoming irresponsible not to own Bitcoin. Just want to first of all point out that he is a billionaire, which means he can go out and buy millions of dollars worth of Bitcoin, which then he can profit when the market even goes up or down, even by 0.2%. If someone from the retail section invests a couple of $1,000s into Bitcoin, it's not going to take them too far. But if they take that same few $1,000s and put it into essentially XRP, XLM, HBAR, Solana, Cardano, AVAX, whatever floats your boat, it will take you further based on the quantity. But this statement highlights the cryptocurrency's perceived importance in times of global economic uncertainty and raising institutional adoption. Tim's advocacy draws from his history as a major Bitcoin holder and early adapter. He famously purchased essentially 29,656 Bitcoin at essentially a 2014 auction, reinforcing his continued influence inside the crypto market space. The immediate effect of Tim's declaration primarily influences investor sentiments and market interest in Bitcoin. His stance may drive increased media coverage and foster a bullish sentiment in the Bitcoin community because a billionaire came out and said, you need Bitcoin no matter what. Tim's comments also reflect growing confidence in institutional Bitcoin adoption, yet do not indicate specific regulatory changes. This evolution comes in broader discussions about economic stability and cryptocurrencies as a hedge. Despite his criticism of alternative cryptocurrencies, Tim's potential impact is concentrated solely on Bitcoin. His remarks could prompt both retail and institutional investors to reconsider their Bitcoin position. I'll be honest, if you're an institution, you want to go for Bitcoin, by all means go for it because you have millions to billions to your name. If the market moves even 0.1% up, you're in profit. If you're from the retail section, I wouldn't tell anybody in the retail section to go towards Bitcoin. It was too late a long time ago, and it's even way more later now to even step even a pinky toe into Bitcoin in any sort of a way. Historical trends show that the high-profile endorsements like Tim often lead to increased buy-side pressure on Bitcoin. Institutional interest is historically correlated with upward movements essentially in Bitcoin's market value and adoption. Ray Dalio, also the founder of Bridgewater Associates, reaffirmed this. His concerns about the weakening US dollar, advocating Bitcoin as a viable alternative currency globally. Sorry about that. I would personally say XRP is the viable, essentially global currency that's going to be used as a middleman token. But Dalio's warnings underline potential shifts in its traditional currency rules, suggesting cryptocurrencies like Bitcoin may gain promise and economic uncertainties. Billionaire Ray also retreats his warnings about the US dollar's decline, emphasizing Bitcoin's potential as a hedge. Dalio's respected economic voice raises concerns about the weakening dollar and suggests that Bitcoin could act as a safeguard. As the founder of Bridgewater Associates, Dalio has a long history of issuing economic forecasts. He claims that the rising supply of fiat currencies may push investors to consider cryptocurrencies like Bitcoin. His comments come alongside warnings about the US debt situation. Dalio's remarks also could potentially influence crypto markets, as Bitcoin and other assets are positioned as an alternative store of value. Both Bitcoin and gold showed positive market reactions following his statements, highlighting his influence in financial circles. Just want to point this out. Bitcoin didn't show positive reactions towards his comments, but gold did. The implications of Dalio's sentiment may affect investor behavior, possibly directing flows towards alternative assets like Bitcoin. His concerns extended to the US physical landscape, predicting issues if essentially debt-related measures continue unchecked. Crypto is now an alternative currency that is essentially has a supply limit. So all things being equal, if the supply of the dollar money rises and all the demand for it essentially falls, that will likely make it crypto an attractive alternative currency. Yes, true. I think that most fiat currencies, especially those with large debts, will have problems being effective storehouses of wealth and will go down in value relative to hard, essentially, currencies. Somewhat true. This is what happened in the 1930s, the 1940s period, and to 1970s and 1980s period, said essentially Ray Dalio. Market participants are nearly observing any regulatory adjustments, and these warnings might essentially induce Dalio's insights that may strengthen Bitcoin's position as a viable alternative, sparking investor reassessment. Historical trends reveal periods where fiat currency depreciation led to increased demand for hard assets. As the modern parallel, Bitcoin could experience an amplified interest driven by Dalio's influence and economic observations. Just want to point this out because a lot of people get this wrong inside the crypto space. And in this case, it's billionaires that are getting this wrong. They're probably just saying these things to get more people into Bitcoin from the retail section. If you're somebody from the retail section and you're buying into this BS that you need Bitcoin in your life, and all you have to your name is a few $1,000s, all you're doing is adding more money to the pot for the people that are sitting on top inside the Bitcoin essentially ratio. If you want to do well, essentially, in life, inside of these cryptocurrency market spaces, Bitcoin is not your answer if you're inside the retail section. Even if you're inside the institutional section, I wouldn't say Bitcoin is your answer in the long term any sort of way. Alternative assets are so much better because they bring so much more utility to the table. It's not about buy, sell, quick profits or long-term profits. It's about utility. That was the main purpose of cryptocurrencies, which is essentially where Bitcoin suffers the most when it comes to utility. It's more of a buy, sell, essentially store of value type of asset. Second of all, this ideology that people have that essentially fiat currencies will completely collapse. If fiat essentially completely collapses, that's going to be collapsing essentially USDT up to a certain extent. If the US dollar essentially collapses, it's going to have an impact on USDT, USDC, and essentially also any other essentially PYUSD, RRUSD, and the list just goes on. These fiat essentially alternative stable coins like USDT, USDC, and RRUSD, they're backed with cash reserves, they're backed by US bonds and US yields and so on, which in fact strengthens the US dollars in reality. And I know everybody essentially for the longest time inside the crypto space said the US dollars is going to go to zero, it's going to go to zero. If that happens, so will the other currency. Well, they won't go to zero, but they'll be impacted heavily. Let's not forget they're pegged to a 1-to-1 ratio and they're backed with cash reserves and up to a certain extent with bonds and so on, which are the exact same things that essentially help the US dollars stay dominant. And it's the exact same reason why they passed the Genius Act inside the United States, because in the long term, it's actually going to strengthen the US dollars with essentially the US dollars in a digital form, essentially leading the market space in a digital world. That's the reason why they passed the Genius Act, so that the US dollars can remain dominant in a digital world. Because USDT, USDC, RRUSD, PYUSD, and all these stable coins are all backed with US bonds, cash reserves, and so on, which is exactly what strengthens the US dollar. So this is one thing that everybody gets wrong. Essentially, they say, you know, the US dollar is going to go to zero and so on and so on. It's not, because as long as stable coin exists, they'll actually strengthen the fiat currency. In time, we would move on to actual digital dollars and fully leave behind cash. But for the time being, it's not going to go to zero, and it won't go to zero by then either, because they're still backed by the same things that strengthen the US dollars. A lot of people don't understand this. A lot of people actually thought the US dollars was going to go to zero. And I said this 3 years ago, it can't go to zero because, well, what's backing the stable coins? That's why they passed the Genius Act. If you go back to what essentially Trump's administration said when they passed the Genius Act, it was to dominate in the digital world. The US dollars can dominate so that the fiat US dollars can continue dominating. So two things people get wrong. One, US dollar is not going to go to zero. And two, if you're inside the retail section, Bitcoin is the last thing you should be looking at. If you have a few $1,000s to your name, don't even look at Bitcoin. Don't even touch Bitcoin with a 10-foot pole. Because if you do, all you're doing is adding more money into the pockets of the wealthy. Now, you're better off going towards alternative cryptocurrencies, not financial advice whatsoever. It's just, if you just look at what they say, look at what they do, read the documents, you'll have a bigger picture. Now, but although I'm here for you as well to give you that bigger picture. The NASDAQ is what we're going to talk about next. The NASDAQ heightens scrutiny for crypto-focused firms. So as the SEC and CFTC are making it much more easier for crypto companies and cryptocurrencies to be a part of the traditional market space, the NASDAQ should be happy about this, but for some reason, they're playing in favor of the brokers who are going to be losing out the more we go towards tokenization. The Nasdaq has intensified oversight of cryptocurrency-focused companies, particularly those essentially raising capital for digital asset acquisitions. This action responds to the surge in traditional, essentially institutional investments and includes stricter requirements for shareholder transparency and involvements. The Nasdaq enhanced, essentially, scrutiny on crypto firms aims to ensure transparent shareholder involvements aimed market volatility. The Nasdaq has intensified oversight of essentially companies raising funds to acquire cryptocurrencies for their treasuries, aimed at essentially increase of digital asset-related equity raises. And Nasdaq's stricter regulation arises due to notable institutional interest and the surge in crypto holdings among listed companies. Currently, there are no direct quotes from the Nasdaq's leadership or prominent cryptocurrency figures regarding the recent intensification of scrutiny on cryptocurrencies-focused firms. The push from the Nasdaq for enhanced scrutiny and the requirements for shareholder approval marks a significant shift in the landscape for essentially crypto-focused public companies. Since the early 2025, 154 companies have announced plans of exceeding $98.4 billion to purchase digital assets. That is ridiculous, but impressive, to be fairly honest. Since early 2025, 154 companies have decided and announced plans to join the digital space. That's essentially an amount of $98.4 billion to purchase digital assets. This scrutiny impacts essentially Bitcoin, Ethereum, and expands to altcoins. Institutional dynamics are realigning in light of the Nasdaq's actions. These stepped-up oversight influences stock prices of firms with significant essentially crypto treasuries, and firms like essentially Protage, Biotech, now Alphaton Capital are directly affected due to altered Nasdaq requirements. The market dynamics essentially signals a shift towards more cautious crypto engagements. Proactive monitoring and stricter regulations by financial platforms like the Nasdaq underscores a period of significant adaptation and potential restructuring in digital assets and investments across various crypto assets, reshaping strategies in crypto-focused investments. Financial and regulatory impacts could prompt shifts in digital allocations and governance essentially models, leading to more stringent compliance and requirements, and these changes might require firms to adapt to changes that might require investment strategies to align with evolving regulatory landscapes. Impacts on traditional and crypto markets are anticipated. So the Nasdaq is essentially asking for more transparency because too many companies, public companies, are creating some sort of crypto treasuries. And they're saying it could end bad if we don't get a grip of the market space now. Now, why is the Nasdaq becoming more strict? Is it because of the brokers? Could be. The brokers right now are extremely angry. The same way the banks were very angry and weaponized the SEC, the FDIC, the OCC, with the help of Biden's administration to slow down the progress of cryptocurrencies of the digital world inside the United States. Now it's the brokers that are angry because they're losing grip on the market space as well, going into a digital world, because tokenization will pretty much put brokerage firms out of business. Let's just be honest with ourselves. When companies like essentially Crypto.com or Trust Wallet that was announced yesterday can come inside the market space and offer the same services brokerage firms would offer but charge a fee to their client base, well, you could just do it through Trust Wallet. You don't need a brokerage firm anymore. So they're not happy in that sense. And it could be that the Nasdaq is getting some sort of opinions from brokerage firms. On the other hand, the Nasdaq is also making a genuine point that transparency still needs to be there, and that these firms, these public companies that are creating crypto treasuries should not be doing it just to boost their stock prices, because a lot of public companies did create some sort of Bitcoin, essentially treasuries, just to boost their stock prices. They did, and it was proven that they did. Some companies actually did well by announcing they're going to create a Bitcoin treasury, and their stock prices went from where it was sitting from and below to at a much more higher price point. And some companies didn't do too well when they made the announcement. But I approve what the Nasdaq has said, up to 50%. Yes, transparency needs to be there, but making the market space extremely strict where the crypto market space can breathe, that shouldn't be done. The good thing is the final verdict is obviously going to be the SEC and the CFTC. And so far, the SEC and CFTC are pro-innovation, pro-crypto, and making the market much more open towards cryptocurrencies. So the brokerage firms have lost. The same way the bankers lost when Ripple won their case. Now, BitGet is what we talk about essentially next on tonight's live. Yesterday, somebody asked me a question about BitGet tokens. Is it a good token to go towards? I said they're legitimate. I wouldn't say essentially It's a must-have project, but they are legitimate. Someone wants to essentially go towards them. It's the same scenario as Crow tokens for Crypto.com. So BitGet Exchange is about to be launching tokenized stocks on the topic of brokerage firms. Tokenized stocks trading on Ondo Finance. Yesterday, I also revealed that Ondo Finance, essentially X stocks, are going to be expanding into Ethereum from Solana and the other chains that they use on tokenization of stocks. Now, even BitGet Exchange is going towards tokenized stocks, the same way Crypto.com has, Trust Wallet has, and so on. The cryptocurrency exchange BitGet and its self-custodial wallet service arm, BitGet Wallet, has teamed up with tokenized securities platform Ondo Finance to make it possible with essentially for over 100 tokenized real-world assets to go live for trading. The collaboration makes tokenized stocks and ETFs accessible to retail investors outside the US. The integration adds a new real-world asset feature to BitGet and BitGet Wallet apps, which lets users trade essentially assets that are backed by real-world securities. These digital assets use the liquidity of regular stock markets. The partnership brings together BitGet's large user base with Ondo Finance, a platform essentially with over 1 billion assets essentially under management. Integrating Ondo Finance marks a key step in our strategy to position BitGet Wallet as the global asset passport, stated essentially Jamie, the chief marketing officer at BitGet Wallet. Nathan, the founder and CEO of Ondo Finance, added that the partnership brings these assets directly to users in a simple, secure, and accessible format. With a $1 investment, you can trade tokenized copies of well-known stocks like Apple, Tesla, Microsoft, Amazon, Nvidia, 24 hours a day, 7 days a week. This model makes it a lot more easier for foreign small investors to get into these assets that are usually hard for them to get into. The current selection of over 100 assets is set to expand to more than 1,000 stocks are going to get essentially tokenized. And essentially 1,000 stocks and ETFs that are going to be coming towards the market space in the coming months. Furthermore, companies plan to support additional blockchains such as Solana, BNB chain in the future, increasing their compatibility. BitGet's CEO Gracie Chen talked about how important this move is from a business point of view. She said that the project would connect TradFi vehicles to the new age of decentralized finance and make it easier for high potential global investments to get into the crypto market space. This makes money access easier. This collaboration signifies a notable step essentially in merging traditional financial instruments with the efficiency and accessibility of blockchain technology. By turning real-world assets into tokens, the platform hopes to give more people access to financial goods that are essentially were once only available to big investors because of high minimums and location restrictions, which was the brokerage firms. The move follows a trend that is growing quickly in the business world, using decentralized technology to make financial markets that don't have any borders. For buyers, it means owning small pieces of very valuable stocks and being able to trade them at any time. In the future, the big task will be figuring out how to deal with the changing rules for tokenized securities to graduate, essentially guarantee the future success of tokenization. Tokenization is absolutely taking off right now inside the market space. I mean, the list of essentially crypto firms that went towards tokenization with essentially Crypto.com, Trust Wallet, Robinhood, Coinbase, Binance, and even BitGet Exchange, I mean, and essentially combining the stock market, the ETF market space, the bonds market into one rolled-in app for the crypto community is pretty damn impressive, to be fairly honest. And the more that happens, the more the traditional world starts connected to the crypto world, the better it is for us because it means more liquidity. The doors are going to be opening even further. Now, Grayscale is what we're going to talk about next on tonight's live. Grayscale introduces Ethereum-covered call ETFs on the New York Stock Exchange. Before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments, put it down in the comment section. I'm more than happy to help you out. So let's go inside the comment section first before we go through the next news on tonight's live. If you have any questions, go for it. Good evening, Miles and CMF. Manny, good to see you as well. How you doing? How you been? Do you think Michael Saylor had anything to do with him coming out saying this? Yes, regarding what the two billionaires said about Bitcoin, how you must have Bitcoin in your portfolios, otherwise you're missing out. Yes, 100% probably Michael Saylor had some sort of saying that. Also, essentially other Bitcoin investments will probably help them to say that. Miles, I've invested in Bitcoin 10 months ago. I put £10 and it's gone to £14 now. Ooh. Breaking, surprise, 0.75%, -1 rate cut. So thank you, media, for that. Messi, good to see you. How you doing? Little bro, how you doing? Hello, Miles at CMF. I'm late. My apologies. Lena, no problem. Good to see you. Hi, Miles. Richard, good to see you as well. How you doing? Hi, Miles at CMF. Stormy, good to see you as well. How you doing? Now, Grayscale, introducing a new Ethereum covered call ETF. Grayscale launched the Ethereum covered call ETF, which their ticker is essentially ETCO, to generate income by selling call options on Ethereum ETPs without directly holding Ether. It offers bi-weekly income distributions targeting investors seeking yield from market volatility. Grayscale Investments launched the Ethereum Covered Call ETF, ETCO, on New York Stock Exchange Accra, targeting investors interested in earning yields through call options on Ethereum. Grayscale's newest essential edition is, in their words, probably going to be helping Ethereum to scale further inside the institutional sector. Grayscale Investments, the world's largest digital asset management platform, to complement existing Ethereum strategies inside the market space, is essentially what was said by Krista. The Grayscale ETF Capital Markets Senior VP highlighted the new, essentially, product's potential benefit for varied investor needs. This was the tweet that they put out. Grayscale Ethereum Covered Call ETF is designed to complement an investor's existing Ethereum exposure by adding an income component. We know that investors are all unique with different needs and essentially investment goals, and we're excited to introduce this new ETF as a part of our commitment to providing initiative, outcome-oriented essentially solutions that meet them where they are. This introduction could attract those aiming for returns from market volatility rather than outright crypto ownerships. It diversifies investment strategies while essentially focusing prominently on ETP options, leaving the on-chain activities mostly unaffected. ETCO implies essentially a systematic covered call approach, mainly affecting essentially Ethereum-themed ETPs and derivatives market spaces. This essentially launch follows a precedent set by similar Bitcoin-focused products, suggesting a trend in financial products leveraging call options on high volatility assets. The fund structure emphasizes off-chain opportunities, potentially influencing future regulatory and market dynamics regarding ETF offerings and essentially compliance with exchanges like the New York Stock Exchange. The launch is essentially devoid of the on-chain data impacts while keeping a significant focus on essentially market-driven options in income. And historically, similar products by Grayscale have emphasized providing income options without moving underlying crypto assets directly. The regulatory implementations remain favorable as the ETCO adheres to the New York Stock Exchange Accra listing requirements, ensuring secure investment engagements. Is this going to help Ethereum scale further inside the traditional market space? Probably not. I'll be very honest. Ethereum wasn't an appealing asset when it first launched as an ETF because it didn't offer anything to investors. Bitcoin offered a limited supply, which made it such an appealing asset for investors, knowing any more couldn't be printed, but then BlackRock said it can, putting that to one side. Ethereum, when it launched as an ETF, it didn't do the numbers people thought it was going to do, mainly because investors didn't see the point in it. They saw Bitcoin, limited supply, great choice. Ethereum, what's the point? Unless that's staking capabilities. This is an interesting, essentially, way to get more people interested in Ethereum ETFs, or in this case, Ethereum ETPs, but what they really need is staking capabilities to get Ethereum off the ground. Because then investors will see it, okay, if we go from Ethereum ETF, we have staking capabilities, which means I can earn money on the Ethereum that I'm holding. Bitcoin's appeal, limited supply. Ethereum's appeal could be staking, which is something I said a long time ago. Now, Germany is what we're going to talk about on tonight's live. Yesterday, we talked about France's crippling economy right now, who, by the way, is thinking about starting a war just for Macron to save his own arse in that sense. Germany, who is another pillar that's holding essentially Europe together, the EU together, and well, they're not doing too well either. So Germany's economy shows resistance up to a certain extent to policy adjustments, as essentially Friedrich Merz faces scrutiny, impacting broader macroeconomic discussions. So This scenario highlights volatility in economic policies and essentially policies possibly affecting cryptocurrency markets. Without direct evidence linking cryptocurrency fluctuations to Germany's essentially physical challenges, Germany's economy is undergoing challenging times right now, with key concerns surrounding policy decisions. Frederick, the essentially leader of the CDU, stands at the forefront of this leadership, facing increased scrutiny, although there are no official statements by him linking to urgent policy changes. The situation involves speculation around the government's response to economic strains. Despite assumptions that there are no confirmed connections between Moses' decision and the specific DeFi or crypto market impacts, however, discussions remain prominent regarding essentially possible physical strategies. Germany's economic status affects various sectors, with financial shifts drawing attention. Cryptocurrency assets are witnessing growth unrelated to German policies so far. Market sentiments remain largely influenced by broader global conditions rather than distinct regional factors. Institutional responses to the economic conditions are notably absent, with no official interventions targeting the DeFi sector. On-chain essential activities show varying investment patterns, with negligible ties to Germany's current physical challenges. Potential outcomes from Germany's economic scenario may influence future financial or regulatory frameworks, and historical data reveals limited direct impacts on blockchain markets, but ongoing developments are closely monitored by industry players for potential shifts. Retail outflows, whale stagnation, are attributed to broader global context, not specified Germany's government interventions. Bitcoin's market analyst also, with economic pressures mounting, the German leadership, including figures like Frederick, must carefully navigate their strategies. On one side, we have France's economy pretty much going, and on the other side, we have Germany's economy pretty much going, which are two of the biggest pillars keeping the EU together. This should push the European Central Bank to turn on their printing machines. Once the European Central Bank turns on their printing machines, the Fed will turn on their printing machines as well, which will push the crypto market space up. If the European Central Bank doesn't turn on their printing machines, then Macron will start a war in some sort of a way, just so he can say that his country is in a war and it's not his fault that his country has completely collapsed under his sight. Germany might continue that war, just so that they can also say that it wasn't their fault that their country's economy is completely collapsing, because they're in a war. Both of those countries are essentially not doing too well, the simplest way to put it. So the European Central Bank better get their printing machine up and ready, which is heavily going to help the crypto market spaces right now. Now, Ripple is what we're going to talk about on tonight's slide. Before we talk about Ripple, let's go inside the comment section first, and then we talk about Ripple news on tonight's slide. Hi, Miles. How are you today? Michael, good to see you as well. How you doing? A little bit better, not too great. Miles, do you have to pay fees if you send from one time gem to another? It depends what chain you're sending it on. It's just the fees that you would have to pay on that chain. So if you're sending on BNB chain, then it's BNB fees. Tron fees, XRP fees, XLM fees. You get the picture. Depends on the chain that you're using is the fees that's going to be applied to it. Hi, let's go, Michael. Low life expectancy if you're a German politician at the moment. Would you buy XRP ETP? The tax is 1% in Sweden, otherwise is 30%. Would I buy an XRP ETP or an XRP ETF? Probably not. I would rather buy XRP itself. I said this a long time ago, and I'll still stand by it. 2 years ago, when everybody inside the crypto space was backing a company that you could say is under investigation, which was selling Ripple stocks. 2 years ago, there was a company by the name of Linktico selling essentially Ripple stocks. And people said to me on live, Miles, would you buy XRP and Ripple stocks? I said, no, why would you do that? There's no point of buying, first of all, essentially stocks from a company that isn't public. That makes no sense. Ripple isn't public. Why is Linktico selling their shares? And I said, you're better off buying XRP. I'm telling you the same thing now. No point of buying XRP ETPs or ETFs. You're better off buying XRP itself, not financial advice in any sort of a way. Now, there's also a study case done on why people would prefer ETFs rather than the asset itself. Many reasons in place, but the main reason was people were lazy. there was a study test done on why would you not buy essentially Bitcoin itself, and why would you buy Bitcoin ETF? Why would such a client of BlackRock or Franklin Templeton or Grayscale buy Bitcoin ETF, not Bitcoin itself from Binance Exchange or Crypto.com Exchange or Coinbase Exchange and so on? And they said the main reason was they were lazy. They didn't understand the fundamentals, but they wanted to be a part of Bitcoin's essentially movements at that time. And that's the main reason why they brought essentially Bitcoin ETFs. They first didn't trust the places that you could buy it from. They didn't understand how to buy it. They didn't understand how to store it. And they just saw it as a much more easy option just to buy the ETF and let BlackRock or Franklin Templeton or Grayscale or their essentially custody, like for example, Coinbase and so on, to be the one to safeguard their assets, and they'll just buy the ETF. But if you're somebody inside the crypto space, you understand how to safeguard your own assets, then why buy an ETP or an ETF? No point whatsoever. I'll be honest. If you know how to safeguard yourself inside the crypto space, then go for it. Messi put, I know better to own XRP, but 1% tax. Well, Messi, you got to understand one thing. The rules, essentially the laws can change. It might be 1% tax now, and you might buy it now, and it'll be like, it's 1%. I'm in the clear. If the laws change and it's no longer 1% and it goes to essentially 20% or 25% or 30% or so on, then you're pretty much, stuck, because as an ETF, you can't really do much. But if you're holding the asset itself, Miles, what are the fees to send XRP below a cent? Would you buy an XRP? No, I read that one already. Stormy, let's go. I know better to. I read that one as well. Hello, Miles. Great CMF. Have you heard of stock XXRP? Supposed to be the Ripple stock. No, but I doubtful that it's supposed to be Ripple stock, because Ripple's not a public company. It's a private company. Good to see you, Burberry. How you doing? To another wallet, I'm thinking of splitting my bags up. I brought a ledger a long time ago, thinking of setting it up. Why not? If you want to. Sorry about that, Bob. Why not if you want to? Split up your cryptocurrencies. Miles, do you buy stocks? No. Okay, I said this a long time ago, and I'll still stand by it as well. 2-3 years ago, someone asked me, multiple people asked me, do I buy stocks and so on? I said, there's no point. I said, people around me, my friends and family do ask me, sometimes I even get members of the CMF, which I will never reveal anybody's name. Sometimes people ask me, should I buy a certain property? Should I buy a certain stock or whatever? And in most cases, I will tell people there's no point, because you're better off investing into the crypto market space with your money than going for a stock, for example, because the stock market essentially is vast. It pretty much is endless, the amount of essential options you have and so on. The crypto market space is this big. It's honestly this big. It might seem the crypto market space has expanded quite a lot on a worldwide basis, and it has, but it's still a lot of room for it to expand. Too much room still left for it to expand. This little market space is going to essentially bring everything around it on chain. So the stock market getting tokenized, real estate getting tokenized, automotive industry tokenization, everything around you is going to go on the blockchain. So there's no point of investing into a stock, because you could take the same amount of money and take it to the crypto market space and invest into legitimate crypto projects, not camel token, donkey token, frog token. Not saying you said that in any sort of a way, but you're better off investing into this tiny little market space, because this tiny little market space is revolutionizing everything around it. So I don't see the point of investing a few $1,000s into the stock market when I can take that few $1,000s and put it inside the crypto market space, which I know certain crypto projects are going to be revolutionizing everything around them. That few $1,000s will take me further in the long term inside the crypto market space than it would inside the stock market. So there's no point buying stocks. You're better off inside the crypto market space. Some people might not be happy about essentially that, but it's what it is. And if you ask a stockbroker, he would probably say the opposite, because he's always in favor of stocks. But if he had you know, it's what my father has always said to me. If you look at the tip of your nose, all you're going to see is essentially, you know, stocks are better, more safer, more legitimate, whatever. You look beyond your nose, you see tokenization of stock, essentially of the stock market. You see what cryptocurrency is going to be bringing to the table in terms of utility of tokenization of stocks, real estate, automotive industry, everything around you. This tiny little market space is about to be changing the world. This is better to invest into than this. Simplest way to put it. Ray, let's go. Now, Ripple news. Today, it came out that essentially Ripple is expanding its RLUSD stablecoin to Africa with new partners. Ripple, essentially, some of you might have heard this news, some of you might not have heard this news, but here's a bit more of a detailed version of it. Ripple is bringing its USD-backed stablecoin, RLUSD, to institutions in Africa. Africa is a huge market space right now for the digital world. This move marks another step in Ripple's plan to expand its presence in the global markets. The stablecoin will be essentially offered through 3 local partners, Chipper Cash, Valor, and Yellow Card. These banks offer financial services to various countries in Africa. Chipper Cash is a mobile payments company. Valor is essentially a large crypto exchange in South Africa. And Yellow Card provides digital payment services in South Africa and across the continent. Together, these essentially partners will enable Ripple to provide secure and compliant digital dollar solutions to businesses and financial institutions. Ripple issued RIUSD back in late 2024. Since then, it has become very popular around the world. The stablecoin has become a $700 million market cap coin so far, which is incredibly impressive with the time essentially scale that RLUSD has climbed so far to $700 million. It is constructed around the pillars of trust, utility, and compliance. RLUSD is supported by Ripple expertise in both the traditional financial systems and blockchain technology. It is issued through a trust company regulated of the New York essentially Department of Financial Services, so there is a strong legal foundation in place, unlike other stablecoins. According to Ripple, RIUSD is already in use in several essentially enterprise cases. These include cross-border payments, essentially trading of tokenized assets, as well as collateral for both Ripple, for essentially both crypto and traditional markets. Ripple is of essentially opinion that Africa is ready for enterprise-grade stablecoins. Many businesses from all over the world, the continent, are looking essentially for trusted tools to manage treasury operations and international payments. Jack McDonald, Ripple's senior vice president of stablecoins, expressed the company's excitement on this announcement. He said that the essentially demand for RLUSD is coming from customers all over the world, and Africa is a key step. He added that RLUSD has also been incorporated into Ripple's cross-border payments products that is now available to African partners. Ripple's movement into Africa is a part of a broader global strategy. Recently, the company created a partnership with SBI Holdings Japan and introduced RLUSD in the Asian regions also. Ripple also intends to launch the stablecoin throughout Europe. It has already applied for a license as an electronic money institution in Luxembourg, essentially prestigious under the regulations of the EU's MICA. There are also, however, more than financial use cases for RLUSD in the African market spaces. For instance, in Kenya, Ripple is partnering with Mercy Corp's Ventures to run a climate risk insurance pilot. Under this model, RLUSD held an escrow and released automatically when specific weather conditions such as droughts are met. That's essentially something that we discussed a long time ago that Ripple was going to achieve, and it has finally achieved it. Imagine that one. Essentially, if certain parts of Kenya are essentially affected by certain weather conditions, RLUSD is automatically released to essentially solve those issues, probably released to the people that are most affected in that sense. That's incredible. This illustrates how blockchain and stablecoins can underpin new solutions being developed and emergency assistance, pretty much like that. Chris, essentially the CEO of Yellow Card, said RLUSD is designed for African users. He also highlighted the importance of allowing customers to generate stablecoin digital assets to ensure safe transactions and financial planning. RLUSD is a transparent, compliant, and practical solution to everyday businesses, is what the Yellow Card CEO said. Ripple's foray into Africa comes at a time when demand for stablecoins is on the increase. Businesses and users want more cost-effective, more quickly settled, and more secure infrastructure. RLUSD provides them with a regulated vehicle to do exactly that. In conclusion, Ripple is expanding its presence in Africa by providing RLUSD to an increasing number of institutions with essentially credible partners and the use cases in real world. The company is essentially bringing global financial tools closer to African markets. This move is likely to change the way businesses and governments utilize digital assets on the continent. Africa is becoming an absolute hotspot for blockchain companies, also for AI companies. And great to see Ripple making the first moves over there. And great for essentially the CEOs of these African companies to be coming out and saying RLUSD is made for African citizens. Now, NASDAQ listed Weebus plans to bring XRP payments to their 60 million essentially client base to Air China loyalty members. If you remember what essentially a couple of days ago Swift said, nobody's going to be using XRP, not a single bank institution, nobody will be using XRP. Well, every day we hear news of more companies using XRP. Weebus and Air China explore blockchain-enabled travel rewards, aiming to enhance loyalty benefits for millions through digital asset integrations. NASDAQ-listed Weebus International Limited has formed a strict partnership with Air China Limited, one of China's 3 major state-owned airlines, to offer airport transfers and premium chauffeur services to Phoenix Miles members worldwide through its WeTour travel service brand, according to a recent announcement. The company, which recently secured up to $100 million in funding through a senior equity line of credit to support its XRP treasury strategy. We also plan to integrate XRP payments into WeTour's overseas platform. The integration would enable travelers to access faster settlements, tokenized rewards, and blockchain-enabled vouchers linked to their membership essentially benefits, subject to regulatory compliance, the company stated. Air China's Phoenix Miles is the airline's frequent, essentially flyer loyalty program, with over 60 million members worldwide. Members can earn and redeem miles across Air China, its affiliated carriers and Star Alliance partners for flights, upgrades, and other travel benefits. This collaboration with Air China, with the potential to reach more than 60 million members and passengers, not only expands WeTour's global service footprint, but also accelerates our vision of building a Ripple integrated travel ecosystem, said Weebus's CEO, Nan Zhang. Weebus submitted a filing with the US SEC back in June, paving the way for potential $300 million investment in XRP treasuries to enhance its global payment solutions. The company intends to use cash, bank, loans, and credit facilities for funding to advance its plans. Weebus's focused XRP strategy also includes crypto-enabled payments and blockchain loyalty programs. But again, according to Swift, nobody's going to be using XRP. Swift is a better payment system. I'm just saying, look, every day we're hearing a different news article about how essentially another company or another institution is coming forward and deciding to use XRP as a payment system because it's the best. I've said this before and I'll say it a million times over. When it comes to finance, XRP takes the rankings as number 1. Everything else below it. When it comes to Web3, gaming, AI, sure, other blockchains will take the rankings. But when it comes to finance, you know who's king, and it's XRP and will remain always like that. It's not going to be Bitcoin when it comes to payments. Bitcoin is a bit sluggish for payments. Bitcoin is more like real estate. You should just stay where it is. XRP by a mile, number 1. On that note, we have also reached the endings of tonight's live. But before we do go, let's do a little bit of Q&A, just in case if you do have any questions. And I can see Javi Pisces has brought some statements, so let's go through them. US, in my opinion, tricked EU very badly. Now France and Germany struggle. The US, in your opinion, tricked the EU very badly. Now France and Germany struggle. I see it as France and Germany dig their own holes, I'll be very honest. Because Germany and France decided to back. I agree up to a certain extent regarding the US essentially led them on. Because during Biden's administration, essentially, the US did lead on the EU to start a war and back essentially Ukraine against Russia, which the EU suffered the most on. But to be fairly honest, the EU was listening to Biden's administration. Biden was pretty much half asleep. I don't know why would anyone take Biden seriously, to be fairly honest. Now, on the EU side, the EU shouldn't have essentially taken... the EU is still funding essentially the war that's happening between Ukraine and Russia. So to that extent, I would say it's up to them. I mean, they could stop the fundings, but for some reason they won't, and now it's too late for them to stop the fundings. because they're so broke. It's either they join the war themselves or they get the European Central Bank to print more money, which actually could, work out in favor of cryptocurrencies. Miles, this has been bugging me for a while. I have to say it. Over a year ago, I tested one of your followers' comments when he said XRP is basically only a gas token. I really rippled into him, and then I sent an apology, though a recent influencer was angry with me 6 months ago because I told him XDC is going to be good for logistics and trade with products around the world. And he said, no, you're wrong. It's only for trade finance like stocks. He's been in crypto for 8 years. My point is, a lot of these younger people need to learn from the boomers like me. If you learned what I forgot and learn to keep learning, you'll be okay. I agree. You don't hear Brad Garlinghouse saying XDC is a gas token product, do you? That's not what he's bragging about. I agree. Thanks, Miles. Good night, all. Stormy, let's go. See you tomorrow, same time as usual. Night, Miles, at CMF. Pablo, see you tomorrow, same time as usual as well. Take care, Miles, at CMF. Facts, Biden been permanently half asleep for years. Let's go, Ray. See you tomorrow, same time as usual. But I agree, Stormy. I will see everybody tomorrow, same timing as usual. We have come to the endings of tonight's live. Tonight was slightly a short live, not really a long live like yesterday, but not much news, and also I wasn't feeling too well. But I hope I delivered of what I could essentially deliver in tonight's live. And also I just got a message that Rex obviously just filed for request approval for XRP ETFs. So we have another essentially filing for XRP ETFs happening as well. Regarding SWIFT, it is messaging system, does not settle on the back end. This is why it's slow, and they can sanction countries to receive their money, because without their messaging, the exchange between the countries doesn't happen. So XRP is not compliant to SWIFT, utility lack thereof. I agree as well. I agree, France and Germany goes down their own hole. Good night, Mouse. Let's go, Cali. See you tomorrow, same time as usual. Good night, Mouse, and CMF free ever. See you tomorrow, same time as usual. Hope you feel better. Good night, Mouse. See you tomorrow, same time. Let's go, Autistic. See you tomorrow, same time as usual as well. Good night, Mouse. Mike, see you tomorrow, but at the same time as usual. But yep, high prices, I agree. Now, honestly, thank you so much to everybody from the CMF who tunes in every single night. And I'm sorry that I've been ill for the past few days. So I haven't been delivering, but try my best. And I love doing the lives. So even though I am ill, still going to be doing the lives. I will be seeing everybody tomorrow, same timing as usual, for episode 368 of the CMF live show. Thank you so much to everybody from the CMF who has liked and retweeted this live show and previous live shows. Honestly, thank you so much to every single one of you. I will see you all tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world, CMF members. Thanks a bunch, Miles. Have a lovely night all. Let's go, Lena. See you tomorrow, same time as usual. Thank you, Miles. Get some good essential restore tonight. Let's go, Susie. See you tomorrow, same time as usual as well. Get some rest, Miles. Let's go, Mike. See you tomorrow. Funky brother. Bye. See you tomorrow, same time as usual. Good night, Miles and all CMF. Thank you for a great live and news, JP. Let's go. See you tomorrow, same time as usual. Thanks as always, Miles. Night, alls. Shelly, see you tomorrow, same time as usual as well. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. The disclaimer of this live has been not financial advice, not political advice, and whatever I say is only for entertainment purposes. Love you all. See you all tomorrow, same time as usual. Thanks so much, Miles, again, for great work, and have some rest. Hope you feel better for tomorrow. Have a great night. Let's